Great. Hello, everyone. My name is Jessica Smith. I lead the nature theme at UNEP-FI. At UNEP-FI, we hear a lot that biodiversity and nature are really the next big thing in sustainable finance, both from a risk and opportunities perspective. Yet this still doesn't really bear out at scale. In 2021, only 30 of 200 PRB banks identified biodiversity as one of their significant impact areas. And in 2020, Share Action found that only 11% of the largest asset managers expected portfolio companies to mitigate the negative impacts of their operations on the natural environment. At the same time, according to UNEP's recent State of Finance for Nature report, the world needs to close a 4.1 trillion USD financing gap in nature by 2050. And current investments in nature-based solutions amount to just 133 billion annually, the vast majority of which still comes from public sources. So while nature is gaining prominence in sustainable finance and many new initiatives are emerging to fill this gap, there is still really a long way to go. Today's panel will focus on growing leadership for nature positive portfolios, particularly in banking and investment. So this segment of the European Regional Roundtable is happening during COP26, but biodiversity has more focus at a UNFCCC COP than it ever has. And actually, the timing of COP26 is in between the Convention on Biological Diversity's COP15, which is aiming for a Paris moment for nature. Now, this has been split up into parts 1 and 2 because of the restrictions around traveling during COVID times. But hopefully by April or May, early next year, we will have a new post-2020 global biodiversity framework. So on today's panel, we'll explore what support banks and investors need from governments and other entities to move forward on nature and biodiversity more rapidly. We know that banks and investors now more fully understand the need to integrate climate risk into financial strategies and have identified the huge opportunities of climate investing. And now there's no time to lose to introduce biodiversity, a risk and opportunity of a similar scale. So I'm thrilled to have 3 panelists today to discuss this topic within our regional roundtable for Europe. So we have Oliver Withers, who's the biodiversity lead at Credit Suisse, Charlotte Kaiser, the managing director of NatureVest at the Nature Conservancy, and Gemma James, who's the senior lead of environmental issues at the Principles for Responsible Investment. So I'd like to start with you, Charlotte. Please, if you could introduce yourself and tell us about your work in this space and briefly how you came to work in this area. I'd also love to know what gets you most energized about your role at NatureVest.
Thanks very much for having me. It's great to be with all of you. So NatureVest is the impact investing unit of the Nature Conservancy, which itself is the world's largest environmental NGO. We operate in 77 countries around the world with a staff of more than 4,000 people. And our focus is on protecting the lands and waters on which all life depends, which includes protecting and managing natural areas and tackling climate change, which represents one of the greatest threats to biodiversity today, hence the presence of biodiversity at this COP. NatureVest is about 7 years old. We are basically a deal team structuring transactions that support biodiversity and climate outcomes and deliver financial returns to investors. We work in partnership with asset managers and structure deals ourselves and raise capital from external investors into those deals. Today, our portfolio is about 2 billion US invested around the world in sustainable forests, sustainable agriculture, renewable energy, fisheries, and community development investments. The mission of NatureVest is sort of twofold. First, it's to really accelerate mission success for the Nature Conservancy. The private capital markets represent by far the largest resource pool for conservation when compared with philanthropy and public funding. And so we feel we're able to really deliver results at scale using this strategy. At the same time, we're really about transforming how capital is deployed and really raising the bar for sustainable investing by offering demonstrations of what true impact investing can really look like with the participation of our science-based kind of strategies and guidelines. In terms of what gets me most excited, I mean, the depth and breadth of our portfolio And the partners that we're able to work with around the world are really energizing to me. We are partnered with Third Way Africa to help address the COVID crisis around ecotourism in Africa. We are partnered with a aquaculture tech incubator firm to try to solve the problem of sustainable aquaculture. And we've just recently announced a collaboration with BTG Pactual's Timberland Investment Group on their North American portfolio. So huge breadth of geographic and sector participation, which means no day is ever boring.
Great. Thanks, Charlotte. And it doesn't sound like there's any boring days. It sounds very exciting. Wonderful. I'll come to you next, Oliver. If you could also introduce yourself, tell us about your work in this space, and you have a really interesting journey to this role in a bank. So if you could tell us a bit more about that, and what gets you what gets you out of the bed in the morning for this role that you have now.
Certainly, and thanks for having me, Jessica. So I'm the biodiversity lead in Credit Suisse's Sustainability Strategy Advisory and Finance Group. So I work with colleagues across the firm to integrate biodiversity into all our decision making. So that's looking at both our banking activities, but also looking on the investment side as well. As you've alluded to, my background has been somewhat circular. I actually started out in financial services and ran a Pan-African asset management business. It was through that, actually, in trying to sell a Pan-African equities fund in the international markets, that we became aware of international investors really looking for a kind of development impact attached to it. Of course, at that point, we weren't really calling it impact, and it was really orientated around narrative. But that really highlighted to me that there was an opportunity for me to pursue a financial services career, looking at something that I was really passionate about, which is nature. Having grown up in South Africa, we had the benefit of forging a very strong relationship with nature. But also coming from South Africa was probably channeled straight into commerce and banking before I had the opportunity to realize that there was anything else out there. So I joined Credit Suisse only this year, joining them from the Zoological Society of London, where I was the head of conservation, finance, and enterprise. In terms of what gets me excited, it's actually working with colleagues and seeing those colleagues go through that journey of awareness, understanding, and then suddenly being in this position of taking action. And it's when you see people reach that point of taking action that you realize it's all been worth it.
Thank you so much, Oliver. Now I'm going to come over to Gemma. We'd love to hear you introduce yourself and tell us a bit more about your work at the PRI. How did you find yourself there, and what gets you energized about your role at the PRI?
Thanks, Jessica, and thanks for having me on the panel. So I'm the biodiversity lead at PRI, and then maybe I'll start with your last question first. I think the thing that gets me is this evolving nature of biodiversity as an ESG issue, and there was no pun intended there, but I came from the mining industry, and that's always had to manage biodiversity. And when I started PRI 6 years ago, I mentioned biodiversity, and I got looked at as if I was green. And we did a webinar on pollinators back in 2015. We had 30 people attend, which is not that many. But now we're beginning to see all this traction and recognition of the role of biodiversity in the real economy, and the risks and opportunities that it presents for investor portfolios. So maybe we're a little bit late, but it's probably better than not getting started at all. Just at PRI, I mean, in the past year, we've had so many signatories coming to us wanting to understand biodiversity as an issue. So we've had to do a lot of scoping around the issue, understand what does the landscape look like for an investor. And we actually produced a discussion paper to link it back to different types of ESG issues. A lot of investors are working on deforestation already, and we wanted to understand how investors are tackling biodiversity in terms of capital allocation, stewardship, policy engagement, and driving meaningful data. We've also been working with UNEP WCMC to develop maps of natural capital hotspots of depletion, and they're hosted on the Encore tool, which I'm sure we can talk about a little bit more later. And these maps track the rate of depletion of 4 different types of natural capital, and then investors can see where the impact might be occurring within their portfolios from a location basis. And then also we've been doing a lot of work recently to try and understand investor biodiversity data requirements, and then what are the different approaches out there and how those approaches meeting investor requirements today.
Great, thanks, Gemma. And we're just thrilled to have a super panel on this topic today about growing leadership for nature positive portfolios. So Charlotte, if I could come back to you next. NatureVest is an impact investor, and you work very closely with other, with banks and different investors. What do you think banks and investors should be aware of with regards to moving towards more nature positive portfolios? And what do you think are the most immediate steps that they could take, whether in-house or working with their peers and partners in this space?
Yeah, and we're working closely with a number of banks, including Oliver's, on a few big deals. I think I would commend, Credit Suisse in particular, as a leader among peers for their understanding that the first thing to be aware of is that not considering biodiversity in their investment strategy and portfolio represents a substantial and material risk to the performance of the firm and to the assets. There's so much at stake. I advised on a paper that Responsible Investor did with sponsorship from Credit Suisse last year that was sort of stunning in respondents' kind of failure to see the system for what it is. And I recall vividly that the financial services industry was ranked kind of 7th among those at risk from biodiversity loss, when of course it's got to be at the top of the list because it relies on every other sector, which in turn rely on natural capital. So I think first taking that systems sort of approach and recognizing that everything is connected to everything else, as the saying goes, and that portfolios are really materially impacted by the health of biodiversity. And then in terms of first steps, I think part of the challenge here is that this is so complex, and unlike climate, where there's a single currency, which is carbon molecule, there isn't one in biodiversity, and in fact analyzing biodiversity's impact on your portfolio relies on a lot of spatial and local factors, and so it can't be done in a very simple way, and that shouldn't stop you, and that in fact you need to sort of, even to move directionally around thinking about what is your water risk, what is your flooding risk, what is your fire risk, from as systems change from climate change, and then to, what is your reliance on soils, what is your reliance on natural, on commodities. These are questions that start to get to the impact of biodiversity on your portfolio, and while they won't get you the perfect and complete answer, they will get you on the way. And so, taking that first step is really the most important thing.
Great, thanks, Charlotte. And coming to you next, Oliver, from your perspective at Credit Suisse, you've joined from the Zoological Society of London with a lot of great biodiversity experience. I'm sure you're in a sales mode to make sure that, all the way up Credit Suisse and all the way down, everybody, is aware of biodiversity. From your experience, what are the main benefits that a bank or an investor can experience, and what should they be aware of with regards to moving towards a more nature positive portfolio? And of course, I think the immediate next steps. Many on the line who will be participating in this webinar will be thinking they need to do something about biodiversity, but they don't know what the next first step is. So, what would you recommend from your experience?
Yeah, I mean, Jessica, I kind of touched on these 3 layers earlier in my introduction, but for me, it's really about going through this journey of first being aware of biodiversity and nature being a variable. And I think sometimes, we've all drunk the Kool-Aid on this panel. We are bought in but we sometimes take for granted that some people aren't, right? And so we actually need to start sometimes with awareness. Then we need to follow that up with actual understanding. And, this a really important point that Charlotte made, the complexity of all of this is that it's not easy to understand all of this quickly, right? And I think that rightfully so, there's a lot of pressure globally to see action. But we can only get to action once we really understand what we're dealing with. And so some of the initiatives that Gemma mentioned, that creating that enabling environment for us where we have better data, we have better understanding of what metrics should be, all of that stuff leads us to being able to act. So I think each organization acknowledges where they are in that journey. And also very large organizations need to acknowledge that their organization could be at different parts of that journey. And we need to be respectful of that, because sometimes, and I'm guilty of this, I've drunk the Kool-Aid camp and I want action today. I can try and ram that down somebody's throat, and they're only at the awareness level. And I'm getting into the complexity of why this is a risk for them, etc. But they're still trying to wrap their heads around, so what is biodiversity? What does nature positive mean, right? And I mean, the number of debates I've ended up in with very smart people around what is the definition of nature positive, for example. We still don't actually have a definition. So I think that, we've got to be patient with people. And yes, the stick is important, but we've got to bring people along the journey with a carrot as well. In terms of the fundamentals, it's as Charlotte outlined, right? I mean, if we don't get this right, we ultimately lose the economies on which not just the financial sector is based, but unfortunately all of business. So this is a long-term problem and challenge that we need to solve for. And part of the challenge we face, right, is that the short-term nature of allocating capital in financial markets. However, we're starting to see, as we've seen with climate, that there's a wake-up call. This stuff is becoming to become real for portfolios, and I think also really excitingly is we're starting to see the opportunity side, right? And there's some really, really exciting opportunities starting to emerge, new models, new approaches, which give everyone a lot of hope. But let's be patient. It's a nascent market, but let's not forget the fundamentals.
Great, thank you, Oliver. And Gemma, from your perspective, PRI has such an enormous membership, and certainly the membership is at different levels of readiness on this topic. From your perspective, what are the main benefits that you think the PRI members should be aware of? And I think Charlotte and Oliver have touched on some of them. And what do you recommend as PRI as immediate next steps that investors particularly can take on this topic?
Okay, so I think I'm going to try and build on what Charlotte and Oliver have mentioned. I think in terms of the benefits, not only can you start beginning to think about how, once you've got that awareness and understanding, how do you respond to some of these operational physical risks that might come about for your portfolio. I think that you also have to think about the transition risks as well. So actually, Jessica, you mentioned at the beginning about the Convention on Biological Diversity, COP15, and agreeing a global biodiversity framework for April. So one of the questions is what will be those policy changes that come about from the agreement of that global biodiversity framework? Governments will now be taking more notice on nature. They'll need to look at plans to actually implement that framework. So what's the transition? Is there a transition to these sort of pro-nature policies? And how's that going to impact you as an investor? But also, what are the real world policies that are going to come out from that will impact your investees in your portfolio as well? So you could almost be a first mover here by beginning to try and anticipate what's coming down the line. And then I also think like a really big benefit is the potential to mitigate systemic risk, like biodiversity and nature loss is a systemic risk. What happens if we start passing these thresholds of planetary boundaries? But that's going to require very much a collective and collaborative effort, not just for the finance sector to address, but for all the stakeholders on the planet. So there's opportunities for collaboration there with others. In terms of steps, so I 100% agree. Everyone's going to be at slightly different parts of their journey. For a lot of the investors that we're talking to, we're encouraging them to use the existing tools that are out there. So how do you identify the impacts and dependencies within your portfolio? And I mentioned the Encore tool earlier. That's a great tool for looking at that. That also hosts the hotspots maps, so you can look at where some of these impacts are occurring. And then there's the biodiversity module now that's embedded within that. And maybe Jessica, you're better to explain that than I am. And then I think what we found is that many investors are also they're not letting the perfect be the enemy of the good. So there is a data challenge out there as well. We talked about maybe things like asset level location data is a barrier, but there's opportunities to engage with investees now to ask for that asset level location data, ask for supply chain traceability. How are the companies identifying and assessing their own impacts and dependencies on nature? And there's lots of collaborative initiatives like SBTN, for example, that are now beginning to provide guidance for corporates and the processes to set targets and to look at what some of those management response options could look like. So I think that's where I would start there.
Yes, actually, just on a related issue, we recently had a series on nature positive insurance portfolios, and from the insurance sector, they certainly thought they knew there was a lot of tools and guidance out there that they could access, but they felt difficulty sort of just navigating the landscape of what's out there and what can be relied on, and just how to travel through all the information that's out there and some of the tools. And my vision would be that we have tools like Encore, and there's other tools like Trace and IBAT and other ones in development. If there was some kind of single entry point that you could offer that would help you navigate depending on what type of transaction or what type of portfolio you have, that was much more easy to navigate. So I hope all these organizations with the various valuable tools can come together and make it a little bit easier for financial institutions to navigate that and access the guidance that they need. And I think just building on what Gemma said, I think the peer exchanges are really important in that regard, to help each other to share that practical experience between FIs. Great. So I was going to come next to challenges, and I think this data challenge is one that comes up so much, and there's quite a lot of efforts. And the one that Gemma mentioned was around having biodiversity hotspots in the Encore tool, and I think that's been a great addition. So Encore is exploring natural capital risks, opportunities, and exposure. And this has been a tool that's been developed by the Natural Capital Finance Alliance. So that's UNIPFI, Global Canopy, and recently UNEP WCMC has been added with funding from the Swiss development agency, SECO. And PRI graciously funded the addition of biodiversity hotspots into that tool. So that really strengthened the data layers that are available in that, and the insight that offers. And then in June this year, we launched the Encore biodiversity module. So this is a early prototype, I would say, biodiversity risk tool, looking at the alignment of your portfolio to a generic biodiversity net positive goal. It uses two different metrics. I would say it has some way to go to be a little bit more user friendly, but currently it focuses on the mining and agricultural sector. So that's very much in development, and will be updated when the Global Biodiversity Framework is available in April, May next year. And we'll continue to build that tool for the use of financial institutions, hopefully with the continued support of SECO. So I think there was interesting points that came out around transition risk and systemic risk, and I'd like to come back to the points of risk, but maybe focus next on the major challenges. the practical challenges. I think we've also mentioned some others that Oliver mentioned, the challenge of sort of moving as one as a financial institution when there's a lot of different parts of an FI that have different, different incentives, different mandates, different time frames. Trying to kind of get the pieces aligned on that is not straightforward. But if we can go around and review what you see as the major challenges, either raising some new ones or elaborating on the ones that have already been mentioned. If I can start with you again, Charlotte, whether we're talking about nature positive portfolios or transactions, what are the major challenges for leaders? And then if you can also mention those lagging behind, and what do you think are the key strategies to overcome these challenges, and any lessons that that FIs can build on in this regard?
Yeah. Sorry. I think one of the biggest challenges is that there isn't necessarily a clear and well understood understanding of what right looks like, and what a biodiversity positive or nature positive portfolio should include, or exclude. And one of our strategy at NatureVest has been to address that by creating examples of deals that can go into such a portfolio, right? And we're really trying to map our strategy against an asset allocation strategy so that there's a real asset portfolio, there's a tech component, et cetera. There's debt, there's equity. And so I think that's a big piece of it. And part of the reason that that's the case, that those opportunities to invest are harder to find, twofold. First of all, the complexity that we've all been talking about, right? What is particularly in sort of the public equities and kind of larger strategy space, it's really hard to try to layer in all of the factors that would create a nature positive portfolio. But then the second is direct solutions that deliver a meaningful impact for biodiversity and conservation are often subscale for financial institutions. And it's a challenge that we've worked on a lot with Credit Suisse in the Coalition for Private Investment in Conservation. And I think part of the solution really is collaboration and partnership. Convergence focuses on opportunities for blended finance to really deliver a solution here, because I think the other big factor, subscale, complexity, and then also the novelty of anything that delivers impact carries unpriced risk. And that's just something that financial institutions are allergic to. And so can we think about ways to buy down that risk, which is really about delivering a public good, which is biodiversity protection or climate change mitigation, with public dollars or other kinds of blended vehicles. So I think it's all of those things together really call for more collaboration across sectors. And I think the financial institutions can really lead the way in sort of showing the capital that could be deployed if those partnerships could come to be.
Great. And Charlotte, if I could stick with you for a minute, I think OECD and others in the public space have been promoting blended finance, for at least a decade. If you were putting together a transaction, do you find the concessional capital, TA grants, insurance guarantees, are they available as you need them, or is there a lot of talk and then the money's not upfront?
It's as if we spoke before this, Jessica. Yeah, no, I think there's a real challenge because there's a little bit of a conflict in interests or motivations for some of the development finance institutions. These are public dollars, and so they are kind of operating on behalf of the public and the public purse. And so the risk tolerance is much lower than we would like it to be. And frankly, the commitment to impact is lower than we would like it to be among many of the DFIs. And so I think there's a huge opportunity for when we think about, for example, the World Bank and other multilateral finance institutions, founded to try to direct capital flows into emerging markets. At that time, they were the majority of such investments. Today, FDI flows are orders of magnitude greater from the private sector than the development finance sector. So why not think about other tools and structures to catalyze capital into sectors that we all agree need to be invested in. And I think credit enhancement guarantees, subsidies of that nature are really where I'd love to see these institutions go in a much more creative and kind of bold way.
Great. No, I think I agree. I think that's certainly a horizon for blended finance that would put public entities in a much more comfortable position, and potentially be very catalytic. So Oliver, I'll come to you with the same question. So, and thank you, Charlotte. Coming back to the major challenges. So we certainly talked a lot about complexity and data challenges. To thinking about nature positive portfolios or transactions, what do you see as the biggest challenge both for leaders, and then if you feel comfortable commenting on FIs that are lagging behind, and what lessons can we build on to help overcome some of these challenges?
Yeah, thanks, Jessica. So, I mean, I'll split my answer up into the mitigation approach and then this conservation approach, right? So I think just building off something that Charlotte said, because it's really, really important, is this idea that money sits in different buckets, right? It's not like there's just a big safe in the bank and there's just capital sloshing around and you can do what you want with it. So what is really critical is actually being able to create transactions, fund structures, etc., that can fit in those buckets of money, right? Otherwise, you've created in many cases insurmountable challenge, quite frankly. That then talks also to this idea around standards and principles, right? So when we look at, for example, sustainability linked bonds, right, there are ICMA principles, and that gives the market some playbook, right? It starts giving investors, bankers some reference points around, okay, this looks credible and legitimate. I can do some further work on it. And the reality is that when you're doing first of its kind transaction, there is no standards or principles, right? And so very often that creates a challenge. And so, it sounds perhaps corny and cliche to say, but you actually need some bravery sometimes. And this is not to say we're looking for dumb money or people that don't understand risk or not measuring the risk. We're actually looking for the people that understand the risk the best, because as a new product, as a new asset class, there's just a perception that this is risky, right? And so as we slowly start seeing certain products pay off, we start seeing that the perception of that risk gets lower and lower. The perception of risk attached to nature gets lower and lower. Touch wood, hopefully, right? But innovation at the start, man, it's hard to sell when you don't have a playbook to point against, right? And sometimes that can be a bit soul destroying. And that's why also these deals, these transactions can take so long to come to market. What can seem like such a simple idea can just drag on and on because the devil is in the detail. Once you're into contracts, the devil is in the detail. It's in the worst case scenario and planning for that. And sometimes we actually just haven't been able to conceive what the worst case scenario is, right? Because we're so focused on trying to deliver positive conservation impact on the ground. So I think that reversing into the right buckets of money and finding that balancing act of standards and principles is really important. And for the laggards, I think what we're already seeing, quite frankly, is a realization that the sustainability linked bond market, that the green market, that the climate bond market, guess what? It's not a fad. It's growing every year, and they actually can't afford to not be a part of it anymore, right? And that's kind of clawing into them and dragging them along this journey to a certain degree as well. And that's fantastic, right? Because it means it's the P&L that's driving them. It's not us, the Kool-Aid kids, bashing them over the heads. So I think we're getting there, and the laggards are going to have to catch up by that very nature. I think that what is going to be a real challenge for us, and Gemma touched on this, right? This idea of transition. And take one step back, I think we've got to be careful that in framing biodiversity as one side of a coin where the other side is climate, some people that are at that awareness level, they're interpreting that as the way we perhaps talk about the oil, coal, and gas sectors, right? it's a dead asset class. And we run the risk that people look at things like agriculture and go, oh, well, it's the biggest driver of biodiversity loss. We've got to stop this. That's not the solution. It can't be the solution, because guess what? We've all got to eat, right? And so I think a big challenge is that we are demonizing certain sectors. And that's not necessarily to say that that sector should disappear or not exist. It just needs to become more sustainable. But then there's a question of, okay, what does sustainability look like in that sector? What is an acceptable transition? What does progress look like? And is it material or meaningful progress? And that, unfortunately, comes back to data and the enabling environment. But we're getting there.
Great, thanks, Oliver. And actually, going back to Charlotte's point about the risk tolerance, there's almost a catch-22 that where the public finance is needed most, it's least likely to go. So I think that's a good question to think about.
Sorry to interrupt, but just to add to that, I mean, the managing the public optics, right? We're trying to catalyze private investors' capital into the sector, but we're going to use public sector funding to try and do that. For some people, those optics are unacceptable, right?
Yeah.
Right. And asking the public to take all the risks so the bankers can get rich. It's very hard. And so the framing I like is that the public is buying the public outcome and the private sector is buying the private outcome. And that's an investment we should be willing to make as the public.
I will second that.
Yes, but hard
we
to
need
communicate.
To form called the Kool-Aid Kids.
Yes. Great. Well, I think that's a great point, and hopefully we do have some public finance audience, for these roundtables as well. So Gemma, I'll come to you next. I'm sure you hear a lot of challenges from your members, especially such a huge membership body, from very wide jurisdictions and a lot of different circumstances that they all face. So, from your perspective, what are the main challenges of the leaders and those lagging behind? And what lessons are, shared in the PRI community to help overcome these challenges?
Yeah, so lots of challenges that come to us daily. So I'm going to try and just pick out a few of them. I'd say, so I'll probably come back to the data issue again, because with investors, we need the data, we need to analyze it, we need to understand. So it's not that there's no biodiversity data out there. There is some biodiversity data, but in some cases, it's about accessibility, consistency, harmonization of data. Accessibility, some investors don't have the budget to pay for big fancy data sets that you get out of some of the data providers, or they don't want to pay for it, and the data should be open access. So that's one issue. Consistency and harmonization, well, we're all really looking forward to something like the TNFD coming around so that we can have that overarching framework that pulls together all the different types of data that are out there. In other cases, investors really don't have, I think, a clear idea of the dependency on nature that their portfolios have. We don't have data on what is being sourced, how much, and from where, and therefore the dependence and impact of that commodity or product on nature in a specific area, because it's so localized. And in addition to that lies the complexity of having that location data, the state of nature in that particular region, the ecosystem services that are present, the dynamics of those ecosystem services, and then the pressures and the causalities that might create any kind of decline there. So having all those linkages between those different pieces of data sets, from that ecological level through to financial level, through to how a company's managing it, and then through to the investor portfolio exposure to all of that, it's really disaggregated, it's very disconnected, and it's very difficult for an investor to sort of draw a piece of string to connect all those different stages, and then by the time you get to the portfolio level, it just becomes really meaningless, right? So I don't know if we've got sort of solutions to all of that right now, but you could look at it in three different ways. Given that a lot of our signatories are global listed portfolio investors, you could look at it from a top-down perspective, where you just need coverage across lots of different companies, lots of different sectors across the globe. And so that might be taking more of an approach where You're literally just asking your investees for better disclosure and having certain levels of governance in place, and you might have some proxies for specific processes that you want to see. The other approach is taking a sector approach. So, you really do need to identify which sectors are dependent on nature or have an impact, and each sector will have their own way of being able to identify that and manage that. And then the third way is probably not so common at the moment for a global listed investor, but it's taking a bottom-up approach. And this is going to be a much newer concept for some, but maybe not if you're working in, say, private equity or having direct investments. But you basically want to look at it more from a regional or a biome approach. And we're working really hard actually at PRI to see if we can find a way to get access to asset level data and link back to those impacts and dependencies, building on those hotspot maps that we mentioned, and then linking it back to a specific region. And we really have to recognize that nature isn't like carbon, so that global aggregated approach isn't going to work, and then you really need to sort of hone in on that area. And then maybe an example, and if we're trying to build off practices already, is in deforestation. Investors have already been engaging and focusing on cattle and soy production, particularly in Brazil, being a driver of deforestation, and in particular the Cerrado region, where we're seeing a lot of soy production, and we're talking about legal and illegal deforestation here. And then not only have the investors been engaging with the companies that are sourcing from that region, but they're also having a policy dialogue through the Investor Policy Dialogue on Deforestation. So they're actually having a dialogue with the Brazilian administration on deforestation and looking at that sort of policy environment and regulatory environment that supports cattle and soy production in the region there. So I think that's quite a nice example to show how an investor could take a sort of a bottom-up approach.
Great, yes, and we are also hearing a lot about deforestation and commodity production from our members as a big concern. And this was certainly prioritized within the TNFD when we're starting to pilot, a TNFD, early beta framework. So with our partners at Global Canopy, we've been undertaking, and partners in the market as well, we've been undertaking a small proof of concept pilot to create a disclosure on soy for a small number of partners to learn how that would look and what we can do practically with that information. So I find really these panels fly by. I'd like to come around and ask you all just what are your any concluding thoughts, and if there's something that you're looking forward to in the year ahead in this space in terms of innovations or creative solutions, anything that you're looking out for in the year ahead that you think could make a big difference. So I'll just come back to you, Charlotte, to start. If you have any concluding thoughts on this topic, and if you could share, one thing that you're looking forward to in the year ahead in this space.
Yeah, absolutely. And this has been such a fruitful and robust discussion. And I think, I hope it provides a little bit of fear reduction or alarm diminishment in the financial sector to just begin. I think that's my concluding thought, right? Just take that first step. And the tools do exist. There are many. Choose one and start. And from there, you really will start to, I think, again, I think that the message all of us have here is that the perfect should not be the enemy of the good, and we're not doing it well now, and any step we can take to do it better will really make a difference for people and planet. And I think the other point I'd make is it will make a difference to the bottom line of your institution, and that's really critical. And so what's perhaps seen as a hurdle that none of us have talked about, which is the kind of cost or effort of doing this kind of analysis, really shouldn't be, because the alternative is not viable. So I think that would be my closing message. And in terms of what I'm looking forward to, I mean, our portfolio is about to double, and I'm really looking forward to delivering impact and really starting to demonstrate with some financial institution partners how change is possible and how much we can actually do together.
Great. Thank you, Charlotte. That's very encouraging closing note. Oliver, how about yourself? What would you leave for the listeners of the roundtable, and what are you looking forward to in the year ahead?
I mean, listen, I think there's a lot of excitement about biodiversity, and it's really exciting. I think we've got to manage expectations. There's not just some big natural capital transaction that's going to gobble up hundreds of billions tomorrow. And some people seem to think that. I'll get this question: where's that asset we can deploy billions of dollars to? It's not there yet, but it is coming. There's lots of SPACs and NACs being discussed, which is, again, really exciting. I think, though, that my recommendation would also be, innovation is great, but vanilla is also great as well. It doesn't always have to be rum and raisin. And I think that there's a real opportunity here. Again, going back to your what can people do just to start with? Just start having conversations. We're all people that have had engagement with one another before this call, because we're just learning from each other. So I think the exciting thing over the next 12 months is I think we're going to see a lot more of the learning and a lot more of the sharing of the learnings, which is going to accelerate the market a lot faster. And then I think, going back to the CBD COP, I'm hoping that we see this trickle-down effect, right? And we see sovereigns taking a lead, and we start seeing sovereign financing impacting global financing. So it's all really exciting. Thanks for having us today.
Great. Thank you so much, Oliver. And Gemma, I'll come to you as well. Any concluding remarks, and what are you looking forward to in the year ahead?
So I think, to go with Oliver's vanilla ice cream and rum and raisin, I'd say, to have a sip of the Kool-Aid, get going. I know it feels like addressing nature is this real sort of mammoth task, and it is, but it is an urgent one as well. So we do just have to get going. So I would encourage investors, educate yourselves, use the existing tools and guidance and materials that are out there, and to begin to collaborate with other stakeholders out there, because everyone is learning together. So share your learnings, and others will share with you as well, because it's a systemic risk, and we need to do this together. I think in terms of what I'm looking forward to, I think it will be the big sort of global frameworks now that we're all talking about. So the Global Biodiversity Framework due in April, the work that the SBTN is doing to help with that target setting. The World Benchmarking Alliance next year is also in the process of selecting companies and identifying indicators as well. So there's going to be a lot more information for us to analyze, gobble up and understand, but I think it will be a step forward in the right direction.
Wonderful. Well, I'm so grateful for the three of you for joining our regional roundtable on, or for the European region, on growing leadership for nature positive portfolios. I would really encourage any of the banks that we have listening in to join our Principles for Responsible Banking Biodiversity Working Group. We've recently published biodiversity target setting guidance, and we're going to be updating that with lessons from the banking community, and once the Global Biodiversity Framework is available. And then Gemma and I co-manage an informal reference group between asset owners and another with asset managers on biodiversity in the investment community. And then if we do have any insurers on the line, then glad you've stayed on this long. We do have some work within the PSI on nature positive portfolios, and we'd love to welcome you to that as well. So please get in touch. At the beginning of the call, I asked my three super panelists what gets you energized about your role, and I just feel really privileged to be able to share conversations with people such as yourselves, and to really encourage the Unipify members and the PRI members that we work with to take an interest in nature and biodiversity. And it's very exciting right now that this is the next big thing in sustainable finance, and the understanding of this topic is growing, and there's a lot of learning coming over from the climate space. And certainly attacking the climate issue at a portfolio level will eventually bring you to biodiversity and nature-based solutions, and particularly focusing on the food and agriculture sector. So we're working very closely with our counterparts in the climate theme on this topic. So I really want to thank you again for joining this session of the European Regional Roundtable, and thank you again to the super panel that we had, and we hope everyone enjoyed this, this session. Take care.